and you get 1391. And like I said, let's hop back over, look at the charts right there, and we literally got 2 ticks away from the high of that. So definitely an exhaustion point. The market does seem to have slowed down ever since it's really hit this 1388, 1389 level, and just creeped up a little bit there. And we'll see how it goes for the rest of the day. I would not be surprised to see a bit of a pullback at the end of the day. And there's different ways that you can trade that. We put a couple trades on earlier when we were on the bull bear binary hour, and a couple of those worked out really well. A couple did not. So on the euro dollar, I wouldn't say it worked out really well, but on the euro dollar, what we did is we shorted the euro dollar, but to hedge our position, and we shorted the euro dollar by actually trading the euro dollar spread. And to hedge our position, let's see if I can pull this up. We actually put on, let me see here. I'll show you exactly the trade so you can follow right along there. There we go. We went in and we shorted the euro dollar up here at 23.40, but to hedge our position, we bought a binary at 23.80, and just in case the market flew up. And the market, the euro dollar did go ahead and rise up, and so what we did was actually closed out the euro dollar binary and the spread at the same time, actually netting a $20 profit, even though it went against our primary position, which was the euro dollar spread. So those binaries definitely can be helpful. And we were able to get it on. Basically, when I took the ticket, I just wanted to recreate the price we got in at there, $10.50. So we were able to get in with it. We had a $50 risk to our trade, but we were able to actually have no loss on the trade versus having a couple $100 loss on the trade by putting that in. And so that's basically how that worked out for us on the euro dollar. And it's always good to hedge your positions any way you can. I mean, one of the great things about the Nadex spreads and the binaries is they are defined risk. So you can never lose more than your margin that you put up to place the trade. Your maximum risk is defined up front. Even with that defined risk, I mean, obviously you don't want to lose whenever you can avoid it. And so it's great if you can figure out a way to hedge off that position. And that's why I like putting the binary sometimes with the spreads, because I'm able to hedge off my position. And like in that case in the euro dollar, we did not take a loss, even though our spread position didn't work out. We didn't get that pullback that we were hoping for. And basically when it spiked up here and it was at around 23.80, 23.90, that's when we were able to take it off and get rid of that one. So on the ES, we put in a couple positions, and we were looking to go short, still thinking that the market is going to fall off of this level. And we had completely defined risk. It was great. We put on 2 positions, basically equal to 2 futures contracts, risking 2 points on them, and just 2 points, $100 risk per trade there. And I mean that's just a 2-point stop loss. And where we put the trade on, it definitely went more than 2 points against us. And we, had time to let it, play itself out. It settled out. We did not make any money on that. We lost our risk, our 2 points. At the same time, there's still opportunity to get in on the day if you do want to fade this play. Again, I mean, it's been a strong position, but there's really nothing left for it to keep going. And if it kept going, I mean, I don't even know where it would come from. So what would drive the market at this point? And you can definitely see some people taking their profit before the weekend. And I think that's what we're going to see here near the end of the day. And definitely a shout out to Paul. He called in yesterday, and he basically made an excellent call on looking at placing either a binary or spread trade to go long on the S&P after the big dip down. And so when we looked at that trade, and look at the archive from yesterday, but let me back up. I'll show you how that trade worked out. And as the market was making its low over here on the 2nd, here we go. And it was basically oscillating right here. And he was looking to go long, and I said, hey, if we're going to go long, our profit target needs to be 1381.25 because that's where the deviation level is from the low of the day. And so we put our profit target order right at 1381.25 there, and market did head on up, closed out above that level. And if you place that trade, if you went ahead and went long, whether you did it on the binary or the spread, on the binary, for a couple $100, you would have made over $1,000. On the spread, you would have made a few hundred on that one because it really didn't go that much above the level that we were looking at. Either way, you profited. And the binary trades can work out well when they work out, and they or if you get out early, which is a lot of what we talked about. If you get out early on the trade, the spreads can work out really well because they don't have to get they don't have to go really far. They don't have to go 10, 20 points if you choose a spread that's somewhat in the money, close to the floor or ceiling. And so we were able to use either one of those and have a great trade. And what Paul was noting yesterday was just that when the market does fall down, has a big down day like yesterday, you often see about an 8-point pull up at the end of the day. And he was right on. So keep that in your arsenal. Think about that and keep that going. We appreciate that. Love it when our callers call in and just talk about things that they see in the market and how it's working out for them and looking for new ways to trade it. So anyways, I want to go over now, and I want to just show you a few things and look at if you did want to fade the market now that it's basically hit that third standard deviation level. Like I said, short a couple ticks. We can go in and we can pull up the indices bull spreads. And I actually did place this trade on my live account, so we'll see how it turns out. And but here's just the demo platform. And so if I choose this trade right here, and I want to zoom in a little bit for you so you can see. There we go. And looking at the 415 spreads, and there's a 1390. And so on that 1390 trade, we can go in and let's see here. We'll pull this over, and you can short at 1387, which really is a good price to be able to short at, considering the market's right at 1389.25. So you're not talking about just a massive move that the market has to make. And if you went in on this trade and you decided to, let's say, sell 5 of them, then you'd be looking at a risk of $150 one contract. That's a 3-point stop loss. Not a bad stop loss at all. And it's a stop loss, but remember, it's not a stop trade. Okay, meaning that if the market does fall down, then you can look at having a good profit on the way down, as long as it goes below that entry price. So as long as it's below 1387, you're break even. Everything below that would be profit, and you have until again the trade expires before you are actually out of the trade. So even if the market does make, like, say, one more spike up before it comes back down, you'd still be in the trade. Whereas if you sold the futures, you got to be really careful selling at this level, just because, if it does decide to break, it could, it could definitely go. So we place that order, and all you do is put it in. We put 5 to equal 1 S&P E-mini and hit place order. And then the order goes in, we instantly get filled, and now we have an open position that's working for us. Now, another way that you could do the trade is we talked about the binaries. So if we hop over and we look at the indice binaries, and we look at the US 500, and you're probably going to look at either the daily or you're going to look at the weekly, okay? And to figure that out, again, use that standard deviation level. We talked about that 12 points on one standard deviation, and that's really like how I like to place most of my trades based on that. So if we look at around 1398.5 minus 12, then you're having a profit goal of around 1378.5 is where you're hoping the market to go, sort of like we did yesterday on the upside. So with looking at the market going to that price level, then you'd want to find a binary that was around that price level, so around 1378. And if you can find one that's going to work out well, here's one right here. It's only be a $5 risk, okay, and $95 profit if the market closes below 1379. So you could go and you could do 5 of them. It's only a $25 risk. You make $475 if it closes below 1379. So you're not even talking a massive risk. So we're going to go ahead. We're going to actually put 10 on, $50 risk, $950 potential profit. Again, that's a 1 standard deviation move, and we have until the end of the day a few more hours here for that trade to be profitable. Now, you don't have to wait for it to get there. So I'll show you how to put a take profit order in. We'll go ahead and place this order right now. We'll put a take profit order in when we get back. All right. See you on the side of the commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome back to the Diagnostic Trading Hour here with Darrell Martin. And just give us a call if you have any questions. You can reach us. You just look on our website right there at TFNN.com, click on Listen Live, and you'll be able to see the link. And you can watch us on Tiger TV. You can watch us inside the Tiger's Den, where you can actually see the charts that we're talking about. And you also have the ability to check us out on TFNN.mobi, where you can listen to us even on your iPhone. Today I was listening to a show in between a couple shows that I was doing today, and I was listening to a show on my iPhone while on another app, and I could listen and do the app at the same time. So it's pretty cool. Check it out, TFNN.mobi. And if you want to call in, it's 877-927-6648. And so now let's go ahead and have a look at oil and check out what possibilities may exist over on the oil market. And looking at oil, let's check out, let's zoom down a little bit here. And we'll go right into the bars and see where the standard deviation levels hit. Well, the standard deviation level, we actually hit the second standard deviation level, so a very big move. Close yesterday was 87.28, and a 2 standard deviation was 433. So right up at 91.61. So right over here, okay, we basically hit the level. And then the market sort of like went flat a little bit, did one last little spike, and then started to pull back down. So that's sort of the move that you should expect on oil. By the middle of the day, it should had hit its first or second, and in some cases third standard deviation level. And usually it's a 1 level. So this is just been a big uproar of a move day. And so what should we expect on the downside? What you want to do is you want to go, okay, what's the high? The high is 91.74, and then you can go in and take off a 1 standard deviation at 2.16. On that, you get a move down to a potential 89.58. So that's a 1 standard deviation drop. Again, that's 91.74, the high of the day, minus a 1 standard deviation move of 216. Could put you as low as 89.58. That's really as low as you should expect the market to go, and I think that'd be a pretty massive pullback right there. But anything's possible, right? So, anyways, keep that in your arsenal, and we'll see. Let's check out and see if we can see any good trades for anywhere near that level that might give us a good low risk trade. And your oil is actually going to be coming up pretty soon. It's going to be closing out, so you also want to keep that in mind when you're checking out the oil trades. Is that they are going to close out the market there at 2:30. So we only have an hour left for any kind of potential move. And first thing is I usually look at the spreads first. And so I'll go in again and look at the 8 to 230. And what you want to do again, if you're selling, find one that is very close to the ceiling, either below it, above it, whatever. So there's one right here that's at 90.88. That's going to be a pretty low risk. It's a $12 risk. So we'll keep that one over there and come back to that trade. And then we'll go over here, and we're going to check out the daily 500 wide ones and see if there's one that's even better. We have one that's 92. That's going to be a little higher risk. So let's compare the two, and it's a really good lesson right here for you to be able to learn. This is lower risk, but it has to get down to 90.88 for you to be break even. Okay? So 90.89 at the moment. So meaning that oil is actually going to have to move further for you to recoup your $12 loss, and you don't make anything unless it's below where you sell it, below 90.89. For every tick it's below that, for every penny, then you'll make $1. Okay? So for every literally penny below 90.89, you'll make $1 on that trade. And just keep that in mind that you're giving up a pretty decent sized move if you choose that spread, even though the risk is considerably lower. Now, also, we can see that the reward is lower. So $288, whereas the other one has a reward of $435. So a lot more potential reward on that trade. And the big benefit here, even though your risk is higher, okay, it's at 91.37. So, I mean, it's just, 10 ticks off of where oil's trading at right now. So it really doesn't have to move that far for it to be a potential trade for you. Now, other options that you could look at, we can go over to the binaries, and we'll check out crude oil. And we're going to look at the dailies, and we can also look at the weeklies. And if you remember, our profit target was, the lowest we were looking at is 89.58. So, maybe like $90. And right here, there'd be no reason, and this is a good point, there's no reason to sell the 89.50 or below, because you can get all of them for the same price as you can the 90. All right? So if you can get them all for the same price as the $90 spread, why would you take on, basically more liability of making money by taking on the ones below it? Meaning, like on this one, on a binary, what this is saying is crude oil, the September futures contract will be below $90 at 2:30. Well, that has the exact same risk as saying below 89.50 or 89 or 88.50. If you're selling it, you're saying that the statement is false. So now if you're buying a binary, you're saying it's true. You're saying it will be above $90 at 2:30. Okay? So, always take, of course, the lowest risk, closest binary trade whenever you're looking to make money in that direction. And, really you'd even look at this and consider possibly the 94, only $2 more risk, and, you've just taken off a 50-cent movement required for you to possibly profit on that trade. So we'll look at those through when we come back. Stay right there. We'll be right back after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
$6,648. All right. So what we want to go ahead and do is look at what we're doing. We're lining up several trades side by side, sort of just as a teaching opportunity here to see what the difference is between the spread and these binaries, okay? And that's a common confusion. I hear a lot of people trying to figure out, are they the same thing? Are they not? What's the benefit? Which one's better? And it's not so much a factor of better. It's just a factor of, what trade you think is, possible at that moment, what's going to happen. And so what I'm going to do is try to equalize here at the current prices. We got 91.34, so that puts us pretty close on this. So what will happen is, as long as oil is below 91.34 at expiration, or of course, even before that, then you have the potential to make up to $434 depending upon how far it falls. If it's anywhere below 91.34, then the great thing about that is you'll actually be able to go in and, basically you'll have a profit. So it doesn't have to move that far at all. Only has to move down, not even 10 ticks from where it's currently quoting at right now. So, nice short move, not a lot required for you to be at break even. So let's go ahead and let's place that trade now, and we'll put one of those on, okay? And we'll come back and we'll review each one of these step by step. And then the next one over here, we got a binary that we can put on, and basically we put on 3. It's a $78 risk. If it closes below 91, then we will make $222. So we got to grab these quick while we can there. And we got this one sitting at 92. And if it closes below that, we'll make $925. So we put those 3 different trades on. And now let's go through and let's review, sort of what they mean. Okay, how do they stack up on the charts? And we got those trades in. Like I said, we're coming off that standard deviation level. I definitely expect a pullback. How far back, we're going to see. Now, important to note, you don't have to wait until it gets all the way down to take a profit. Okay, so you don't have to wait for 230 to roll around here in an hour to take a profit. You can take one before then. And so as you can tell, they are already starting to make money as they're moving down there as oil is dropping right now. And so if we want to look at this on a chart, what I like to do, and I got the oil September futures contract up here, what I like to do is actually pull the spread up. So I'm going to change windows out and pull this up. And then add basically a rectangle. Okay, so you just go to your drawing tools on whatever charting platform you're using there, and pull up a rectangle, and then go. Okay, well, what did I look at? I had the 92 to 87. So what that does for me is it means I can't lose any money above 92, and my maximum profit is going to be down at 87. So I can put that on there, and then I can just click on it to get the properties up, and make sure my prices line up. So 92 to 87, and then I want to make sure I have my expiration time, so that way it helps me keep track of the trades that I'm in. So 1:30 Central, 2:30 Eastern time. So it's really important to note all the times on the Nadex platform are quoted in Eastern time. Okay, so with this trade right here, very, very small risk, and I can make profit all the way down to that level down there, and it definitely has moved down there. I don't expect to move down that far. We were talking about it earlier, looking at the highs, we're looking somewhere, about right here in this midpoint level that, we could possibly take some profit. So there's a $2.16 standard deviation move. If we just got, a portion of that, would be really happy. So if we go in, and let me see here, we'll back up, we'll look at the high on the chart there, and we'll be able to see that the high on oil, it was 91.74. So we got 91.74 as our high, take off our 1 standard deviation move, and we could go down as low as 89.58, which is pretty much where it started consolidating over in this area before it went up. So we put 89.58, and I'll just draw a right there for that. And let's see here, 89.58. All right, so right around there is basically, if we hit that level, then that is where I should be looking to either tighten, stop, or take a profit on the spread itself. Now, what about the binaries? Okay, on the binaries that we put on, which look, a lot better in a lot of ways, just the way that it's working out today, is if it closes below 91. Okay, so all we got to do is we go up here and put a little line at 91. If it'll close below 91, then we will have locked in maximum profit on the binary, and that will allow us to have a very good return. And if it closes below 90.50, okay, put that on there. Now, if just one of these binary sets, then it'll more than pay for the other one. And of course, if one of the binary sets, that means the spread was profitable also. So that is one of the ways to look at the trades. And really, like I said, we're looking for a close below, if the market actually at 230, and we can drag the chart over here. So if at this time here at 1:30 Central, 2:30 Eastern, it actually closes below this level, then we're able to take profit. Now, one thing to note is once it gets to this area, the binary is going to be worth around basically $50. So you don't have to wait until expiration, because what if it comes down to this, dips down, and pulls back up? That would not be a favorable scenario, right? So you can go in on your trades, and we can pull up our open positions, and we could go in to literally take half of the profit off. And so, like, even on these ones that are at 90.50, a little bit lower, we could say, I want to take off half, and we'll say at 75. So if we sold them at 5, then that's basically a $20 profit. Okay, 400% return on that one trade, and that would also cover the other binary trade. So we put that one on at just a $25 profit, or $20 profit, taking profit there. So that one's setting. And we can do the same thing on this other one over here. Now, on this other one, we were risking a little bit more. So we sold it, if we look at the $91 one, we sold it at $73.50. So we could take, say one of those off, or, two of those off, whatever, but we'll just say one of them. And we'll say if it gets down to, $40 on the trade, that'll make 60, which would actually more than cover the other two and leave a little profit and change right there. So we go ahead and put that on, hit place order. And so now we have those working for us. So if there is a dip, and sometimes there's just a strong spike and then it spikes back up. Well, that strong spike, if you have that working order in there, can get filled instantly. And, you wouldn't even have had time to place the trade, or maybe you weren't paying attention or whatever. So by putting that take profit in, as these binaries, and they get really volatile, okay, as they get closer and closer to expiration, and which makes them great for trading in any kind of flat market. So, before big announcements like Fed funds rate, before unemployment rates, there can be some really, really cool trades to do. And you can also flip around and look at the other side of the trades, where you go, what if I think oil's going to go down, is there other ways to make money besides it having to move down for me to make money? And the answer to that question is yes. So you go over to binaries, and we'll look at the dailies on here, and I'll zoom in again for you. And you have a couple choices, but let's say, the oil basically spiked up at 91.74, okay? So I could go look at 91.50 or 92 and see, a very, high potential profit trade there. If I put that trade on, now this is a probability trade, okay? So if I go in and I put one of these trades on, I make 30, I lose 70 if I lose, all right? So I place that trade, and what this trade is requiring, and I'll pull the chart back up so I can explain it to you. And again, that trade that we just put on, I just want to make sure everybody is able to follow along, is the trade that we put on right there was to go in and we sold the $91 spread right there, and we have this one right here, 91.50 that we sold. So at 91.50, as long as the market actually stays below 91.50 at expiration, then we'll make $30. And so if it goes up to 91.50, we make $30. If it stays flat, we make $30. If it goes down, we make $30. So we literally have some movement up, flat, and down where you can collect premium. And even though your risk is a lot higher, your probability is higher because the move is not required for you to make money. And so sometimes it's a good way to go in and place a trade in a flat market. That's how I like using them in flat markets, is I'll go in and I'll place binaries like above and below or very close to support resistance levels. So it's ideal when you can get them on at resistance levels. So, like when the market comes back up here after this, high that it's made at 91.74 and then selling, a little bit higher trade, then, that's really an ideal trade when you can sell it at those standard deviation levels, at those resistance levels, because you're going to get maximum profit on it. And just to show you, how would that trade have worked out, like at 91.74, right here, if we look at this 92 one, okay, so right when it was spiking back up, and we can go in and we can actually look at the chart and see where it got up to. It actually got up to a value of about $34 on that trade, $35. So if it got up to a value of $35, then, and right now it's at 8, then you already would have been able to take a profit on that trade if you wanted to. You wouldn't even have to wait till expiration, okay? And, if we go in and we say, $35 minus $8 to buy it back, that'd be a $27 profit. You could have taken that trade off and enjoyed that. So that's where it's really good on support resistance levels, where things are just flowing up and down, up and down. It's a quick, easy, really, very fast, 20 or $30. And that didn't sound like a lot, but you go and you start doing 10, 20, 30 of them, and it adds up really quick. And so sort of, similar to a credit spread or an iron condor, but you're doing it on, 1 and 2 hour basis, not on 1 month, 1 week basis. And so a little bit more predictability, especially knowing, okay, here, between this time and this time, there is nothing that is supposed to come out. So, because everybody is waiting on this announcement, or it's Friday afternoon. So, there's different ways, different ideas on how to use those trades. And hope you're getting some ideas. And the more you start playing with this platform, the more you start playing with the trades, you'll see the possibilities that exist. And we talked about, putting straddles on this morning before the unemployment claims report. And to show you, if you were actually doing an all-day trade on that, I'll show you how that would have worked out so far. And if we go over and we look at the indices bull spreads, and we look at the 8 to 415, and what you want to do is you want to find basically what was the price right around the news announcement. The S&P was trading, let's see here, we'll say at 725. We've got CO up. Let's pull up ES. And always helps to look at the right chart. And we'll go over here, and again, 7:30 Central Time. We basically had 1373.42. So you would have been trying to straddle somewhere around 1373.42. And these are the trades you'd be looking at. And I want to check out one other. I just want to see the dailies. Yeah, so definitely the 8 to 415. Now, these came out literally just 25 minutes before you would have put them on. or 30 minutes before the news announcement. So that really helps put the actual strikes very close to where the market's located. So that's one of the nice things about them always releasing new spreads. After 8 o'clock, you get like new ones almost every hour, and every hour on most products. And what that does, that allows you, again, to find trades close to the floor or the ceiling. Okay? So with that in mind, what are the possibilities? What could we take advantage of? And you could go in here and you could look at the 2 charts and say, well, we'll actually pull these charts up. We'll see if it gives us all the data on it. Sometimes you have a little problem getting all the data in there. And looks like we do have a majority of the data. Let's see, we got 7. Let's see if it'll pull all the way back. And so it gets later in the day, the charts don't always pull everything up unless you have them open previously. So that's where it can get a little bit more challenging. All right, so basically what would have happened, I'll go ahead and give you a summary of it. So I was hoping I could pull the chart up and show you. Is since the market was at 1373, this probably would have been around 1370. The other one would have been around 1376, okay? Maybe 1377. So you got 2 points risk on one side. You got, say 5 points risk on the other. You have an 8-point risk. And so you need the market to move up, say 8 points. The market definitely moved up 8 points and then some. And so it covered your total risk on the trade, plus it made a profit on the long side of the spread. And it allowed you to be non-directional, but place the trades in both directions. And again, the ideal scenario is when you can get it when it's right on the floor and ceiling when you're doing a straddle. Even though you'll have a little more premium, then you don't have any what's called intrinsic real value in the option. And it's not like a call option. It's not like a put option. It's not like a credit or debit spread exactly. The binaries, I'm just sort of, when I talked about credit spread, I just more mean like collecting premium. But on these right here, they're just box spreads, and they go to a delta of 1 very fast. Part of that being they expire the same, day or within 22 hours. And, anywhere from 2 hours to 22 hours long. And there's a lot of different ways to take advantage of it. And so we had oil there. We had some other big movers today. Gold was definitely moving like crazy. And so there's a lot of trades that you could have placed on gold earlier today. And I want to say that the gold spreads are closed out now. They follow along with, looks like we got a little bit of time left. Oh, no. So they are closed out. So yeah, they just closed out, and they basically follow along with the floor. So with when the floor is closing down, they're closing down. And if you're ever trying to figure out hours, one of the, this great simple websites, cmegroup.com. And if we look at cmegroup.com, you can go over here and you can go to products and trading, and you can choose, like, say, CME Globex or, whatever you want to do. And so if you go to Globex, and then you can go over to metals, such as gold, and then you can go in and you can actually find, the trade that you're looking at, like GC, and you can click on that, and it'll bring it up, and then you can go to contract specs, and it's really nice because they'll actually show you not only the Globex hours, but the open outcry hours. And it's really important to understand what those hours are, so that way, you know when basically the pit traders are trading. So when the institutional traders are trading, because that's where the volume is, that's where the liquidity is, that's where the market is usually going to move the most, is during that time frame. And so understand that they open there at 7:20 Central in the gold pits. If you go look at gold, then you'll often see, a big move right around that time. And we did. So literally, and this is right before the news announcement, right? So gold flew down, flew back up. This is a very volatile, crazy trade that you could have taken advantage of with the spreads or the binaries. And you could go to and literally look to put those on. Since they open at 7, you could actually put them on about 20 minutes before the gold pits open up, which usually they do have a big move one way or the other. All right, I'll stay right there. We'll be right back right after this commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, this is Darrell Martin with the Diagnostic Trading Hour, and I'm doing a wrap up here. Let's go ahead and see where the markets are currently sitting and what's coming up next week. So right now we still have the S&P up a bit. We're up 26 points. Up 21 on the Russell, NASDAQ 57, and we got the Dow up 222. Oil is up $4 there, and it is coming down off the high, so we'll see if it continues to make that drop. It looks like everything's definitely slowed down. Not a big surprise for Friday, and hopefully we'll see it drop down, have some good trades come in there before the day's over. And then on the NASDAQ, or on natural gas, we're down about 0.027. And the euro dollar still up 190 pips. So a very strong day for the euro dollar. And the pound dollar up 124. And if you look over, 87 pips on the Aussie. So not a lot of big news out of there, but just the dollar's weakness with the market strength, helping drive that movement. And then if we look over at corn and soybeans, we can pull these up. Just very important things for you to watch because they are moving like crazy. And again, you can trade these on Nadex. So they can pop around a lot. It can be really dangerous. We had a recent high there of 820.5 on corn, And right now, sitting at 810.75, so sort of pulling back up off those lows on the week. And if we go over and we look at soybeans basically are starting to do that pullback as well. Not as strong. Corn is in a lot more danger right now. And the next 2 weeks are going to be the really the big factor. So in South America, they had some good crops on soybeans. So that's going to help alleviate the issue on soybeans. And over in China, they basically got it covered. They actually had a really good corn crop, but of course they're going to consume all their own. And we're the biggest exporter of corn, so it's really going to affect more international countries than anything else on corn for feed and for obviously food. And so just be aware of that, and the prices that you're going to start seeing anywhere between a 5 to 20% increase. A lot of people are saying around 10% here at the end of the year. But again, the next 2 weeks are huge. If they get rain, then corn could it'll just drop all right in price. But if they don't get rain, then they're going to lose a lot of the crop. And I don't even who knows how high corn's going to go from here. So there's if you're trading it, be careful, and if you want to be careful trading it, trade Nadex, because that will limit your risk on all of your trades. And next week we have a few things coming up, and let's go over that real quick so that way you can sort of know what's on the calendar. And just looking mainly here at the U.S. markets, and in the U.S. Bernanke is going to have his whole he's going to be speaking constantly, but no surprise there. But we'll have him speaking on Monday. We'll have him speaking on Tuesday. So just be aware that is going to affect it. He actually is going to start speaking at 8 o'clock on Monday. And then he'll wait till 1:30 on Tuesday. So that will impact the market. Everybody will be watching what he says. A lot of times I even hop over on C-SPAN and watch and hear what's coming out of his mouth. And then, of course, at the end of the day, no matter what he says, follow the charts. So, and, if we look over, we got the preliminary non-farm productivity and labor cost, crude oil inventories. We've got the bond auctions, all happening on Wednesday. Important reports on Thursday. We got trade balance and unemployment claims. So everybody's going to, of course, be watching that really tight based on the big number we just had today on the payrolls that came out and how they came in way better than expected. So people will be waiting to see are more people filing for unemployment. And the fact of the matter is, we may have been adding jobs, and they've been touting that on one of the party sides there. The White House has been touting that. But we're still down 6 million jobs from 2008. And so there's still a lot to come back. 100,000, that's a lot of months to get back to, up 6 million more jobs to get people back to work. So hopefully, Congress will pull it together. They'll figure it out. And either, before this election or after the next one, they'll put it together. But we'll have to wait and see. Until then, just make sure you trade smart, maximize your leverage, limit your risk, and do everything you can to be one step ahead. I'll see you on Monday. Y'all have a great weekend.